Hello and welcome to this session on 10 financial questions every entrepreneur must answer, brought to you by Seneca, your partner on the path to success. Entrepreneurship is exhilarating and rewarding, but it carries significant financial responsibilities and risks. Navigating the financial realities of your business is critical to achieving long-term success and sustained growth. Sound financial planning and management support your vision and the longevity of your enterprise. Failing to address critical financial questions can prove fatal to your venture. From accurately calculating startup costs and implementing effective pricing strategies to managing cash flow and mitigating financial risks, entrepreneurs must have a solid understanding of these essential issues. This video will guide you through a set of financial questions that every aspiring business owner should thoughtfully consider, providing a roadmap to financial stability, growth, and achieving your entrepreneurial goals. To start strong, answer these financial planning questions. What are your initial funding needs? Before launching your business, it's critical to accurately determine the startup costs. Underestimating these costs can hamper your ability to effectively launch and sustain your business. Conduct thorough research and create a detailed budget for various expenses, including legal fees, equipment, inventory, marketing, rent, utilities, and initial operational costs. Once you have a clear understanding of your funding requirements, explore various sources of financing to secure the necessary capital. Personal savings can provide a strong foundation, but you may also need to consider options such as bank loans, angel investors, venture capitalists, crowdfunding campaigns, or government grants. Each financing source has its advantages and drawbacks, and it's important to carefully evaluate the terms, interest rates, equity stakes, and reporting requirements before deciding. How will you manage cash flow? Cash flow is the lifeblood of any business, and its importance cannot be overstated. Even a profitable enterprise can fail if cash flow is mismanaged, leaving the company unable to meet its financial obligations or maintain day-to-day operations. Effective cash flow management involves carefully monitoring the inflow and outflow of funds, ensuring sufficient liquidity at all times. Implement strategies such as invoicing promptly, offering discounts for early payments, and negotiating favorable terms with suppliers and creditors. Maintain a cash reserve to cushion against unexpected expenses or periods of reduced revenue. Additionally, consider implementing cash flow forecasting tools and regularly reviewing your financial statements to identify potential shortfalls or surpluses well in advance. Next, answer these questions about pricing and revenue. What will your pricing strategy be? Pricing is a critical component that directly impacts your revenue, profitability, and competitiveness in the market. Adopting a well-thought-out pricing strategy that aligns with your business objectives, target audience, and market conditions is essential. Consider various pricing models, such as cost-plus pricing, adding a markup to your costs, value-based pricing, based on the perceived value to customers, or competitive pricing, based on market rates. When setting prices, carefully analyze factors such as production costs, target profit margins, market demand, competition, and the unique value proposition of your product or service. Regularly review and adjust your pricing strategy as market conditions evolve, ensuring it remains competitive and aligned with your goals. How do you plan to generate revenue? A clear and sustainable business model is crucial for generating reliable revenue streams. While some businesses rely solely on product sales, others may incorporate services, subscriptions, licensing agreements, or a combination of revenue sources. Explore diversifying your revenue streams to reduce reliance on a single offering and increase resilience against market fluctuations or changes in consumer preferences. Additionally, Continuously evaluate and adapt your business model to capitalize on emerging opportunities, technological advancements, and shifting customer needs. Stay agile and innovative, as the ability to pivot and embrace new revenue streams can be a key differentiator in today's rapidly evolving markets. Answer these questions to manage your costs and spending. What are your fixed and variable costs? Understanding the distinction between fixed and variable costs is essential for effective financial management and profitability analysis. Fixed costs, such as rent, salaries, insurance, and loan repayments, remain steady regardless of your business activity levels. Variable costs, on the other hand, fluctuate based on production or sales volume, such as raw materials, shipping, commissions, and certain utilities. Identify and closely monitor fixed and variable costs, which have different implications for your profitability, cash flow, and scalability. Implement strategies to minimize costs without compromising quality or customer satisfaction, such as negotiating better deals with suppliers, exploring more efficient production methods, or leveraging technology to streamline processes. How will you manage your operational expenses? Operational expenses encompass the day-to-day business costs, including utilities, office supplies, marketing, administrative expenses, and professional services, such as accounting and legal. Effective budgeting and regular review of these expenses are crucial for maintaining operational efficiency, controlling costs, and optimizing profitability. Develop a comprehensive budget that accounts for all operational expenses and regularly review and adjust it to align with your evolving business needs and market conditions. Implement cost-saving measures, such as leveraging technology to automate processes, outsourcing non-core functions, or renegotiating vendor contracts. Continuously seek opportunities to streamline operations and eliminate unnecessary expenses without compromising the quality of your products or services. Answers to these questions will drive your growth and investment. What is your plan for reinvestment in the business? As an entrepreneur, you must balance generating immediate profits and reinvesting in your business's long-term growth and sustainability. Reinvesting a portion of your earnings can fuel innovation, expand your product or service offerings, enhance operational efficiency, and position your business for sustained success in an ever-changing market landscape. Identify areas where reinvestment can yield the greatest returns, such as upgrading technology, enhancing marketing efforts, expanding your workforce, or pursuing strategic acquisitions or partnerships. Develop a strategic reinvestment plan that outlines your priorities and allocates resources accordingly, aligning with your long-term vision and growth objectives. How will you measure financial success? Measuring financial success is essential for tracking your progress, making informed decisions, and ensuring the long-term viability of your business. Establish and consistently monitor key financial metrics and goals, such as revenue growth, profitability margins, cash flow, return on investment, and operational efficiency ratios. Utilize financial statements, including the income statement, balance sheet, and cash flow statement, to gain comprehensive insights into your business's financial health. Regularly analyze these statements, identify trends and patterns, and leverage data-driven decision-making to optimize performance, mitigate risks, and capitalize on opportunities for growth and improvement. To manage risk and plan for the future, answer these questions. What are your plans for financial risk management? As an entrepreneur, you are exposed to various financial risks, from market volatility and economic downturns to legal liabilities, cyber threats, and unforeseen disruptions. Failing to proactively mitigate these risks can have severe consequences for your business, potentially leading to financial losses, reputational damage, or even insolvency. Develop a comprehensive risk management strategy that identifies potential risks specific to your industry and business model and implements measures to minimize their impact. Consider diversifying your revenue streams, maintaining adequate insurance coverage, building contingency funds to weather unexpected events, and implementing robust cybersecurity measures to protect sensitive financial and customer data. Additionally, stay informed about potential regulatory changes, industry trends, and economic indicators that could impact your business, and be prepared to adapt your strategies accordingly. Where do you see your business financially in 5 years? Successful entrepreneurs have a clear vision for their business's future, financial growth, and sustainability. Setting long-term financial goals and developing strategies to achieve them is crucial for sustained success and a competitive edge in the market. Outline your 5-year financial objectives, such as revenue targets, profitability milestones, market share goals, and expansion plans. Develop a roadmap outlining the steps to scale your business, enter new markets, introduce innovative products or services, or explore strategic partnerships or acquisitions. Regularly review and adjust your long-term financial plan to adapt to changing market conditions, emerging trends, and evolving consumer preferences. Foster a culture of continuous improvement and agility within your organization, empowering your team to embrace new opportunities and navigate challenges effectively. By addressing these financial questions, entrepreneurs can achieve long-term success and sustainable growth. From initial funding and cash flow management to pricing strategies and cost control, from reinvestment planning to risk mitigation and future scalability, each aspect plays a vital role in your business's financial health and resilience. Thank you for joining us for this exploration of financial questions. Please like this video and subscribe to our channel to receive notifications about future videos.